only on Bloomberg Quint.
Welcome, this is the earnings special on Bloomberg Quint, and we are taking stock of Intellect Design Arena, where the numbers, at least sequentially, seem subdued. In fact, there's a lot of weakness coming through. Let's talk about the numbers, what we can expect going forward with the head of the company, Arun Jain. Mr. Jain, thank you so much for joining us and taking the time out. At least sequentially, the numbers have seen a sharp dip, and I'm sure that a lot will also depend on how you see the numbers year on year, considering there is a lot of products that your company also provides. Can you take us through how you are assessing the quarter?
As I mentioned, I think product business is very different business than the linear business, which is typically every other business is. Year on year, we've grown 14% in revenue terms. And with two deals, if you take it forward, it becomes 20% growth year on year. But on quarter, definitely, our business is not quarter-on-quarter business, and 90 days metrics, just measuring on 13-week is not the way we could able to measure ourselves and do a lot of analysis of it. You can get a picture from this quarter result that my costs are now stabilized. We are containing the cost so that in future, the growth which is coming in, a lot of it will flow into EBITDA directly, and that will have a possibility of substantial increase in EBITDA margins, and that's what the interest of the investor should be. So from this quarter results, you should measure more on the cost side. Revenue side is a shortfall on quarter on $7 million. And if that you put back into the numbers, you may generate a similar kind of EBITDA as last quarter EBITDA. So I think this business measurement, what we need to educate our investor is that how do we measure product business versus measuring services business or any other linear business.
Okay, Mr. Jain, so let's talk about the upcoming year. Now, we have seen a certain number for this particular quarter. Based on the estimates that you have, your targets in terms of revenue growth for FY20, what can we expect in the remaining 3 quarters of this financial year in terms of the top line in absolute terms?
That's right. That's how only 20% growth on year can be met. So initially, during the year, we said our business is designed for 20% growth. So in last 4 years, if you look at the overall business, we have delivered 24.5% growth CAGR from the last 4-year perspective. And we have given license growth of 41% year on year. So these are the 4-year CAGR. So we're not talking about year on year. We're talking about 4-year in row. And that gives a confidence that first quarter is the anomaly. We would have loved to have the number close to the last quarter number. But we know that all the quarters in a banking business decision cycle are not the same. So quarter 4 cycles are fast, quarter 2 cycles are slightly better. So in the second and third and fourth quarter, the business decisions are taken faster for making a transformation agenda, because Intellect is in a space of digital modernization space, and it requires a new dollars to come into bank for making the digital transformation possible. And that is a different quarter business. So quarter 1 of last year was also weak, and quarter 1 of this year is also weak. Compared to the Q2 of last year was very healthy. Q4 was very healthy. So these fluctuations will happen, and that should not make investor moving from one quarter to the other quarter and lose the larger picture. We know we have designed the business where we can have a EBITDA margin of more than 25 to 30% in next few years. And that's the business piece they need to take forward in their planning process.
So, and what about order backlog and timelines of the execution so far?
Yeah, so current backlog is 1130 crore. And we have a cloud revenue which is building up very healthily. We have 300 crore of cloud revenue backlog. And you must be knowing GEM, which is a government marketplace. There's a huge focus of government to move a lot of business to this marketplace. And there's a target set by our commerce minister to be 100,000 crores coming from that kind of a portal, a GMV of 100,000 crores. I think that is the driver for us going forward to give this guidance of 20%.
And what can you tell us about transformational deals for this particular quarter and your expectations on the incremental number of deals that you will be doing in terms of transformation going forward in the next few quarters, comparing it to the previous financial year?
Yeah, so last quarter we have two deals, one in Vietnam, one a large bank in Vietnam, and one in Mongolia, the Central Bank of Mongolia, after Central Bank of Indonesia. So we are occupying that space. In Vietnam, there's a fifth deal in the same market space. So in product business, the leader takes all. So once you made 4-5 banks on our product, the chances of next 5 deals will also be there in Vietnam market. So we are going market by market strategically in Intellect 2.0. So that's the kind of a process. So your question is, we have 41 Destiny deal as of now. It has grown up in last 2 years from 2025 to 41 deals, which are more than 20 crore each. And those are the transformation deals, which we win 2 to 3 deals per quarter, and that keeps our momentum going.
Finally, Mr. Jain, if you could just leave us with an outlook on the margins. What can we expect going forward?
It should substantially improve, and that's what we are saying, that as a business design, we have done a business design for 25% EBITDA in next few years. But in this year itself, exit quarter 4, we are looking around EBITDA of 20%.
Okay, Mr. Jain, we'll leave it at that. Thank you so much for joining us and taking us through the quarter's numbers as well as the outlook. Wish you the best for the future. Well, on that note, it's a wrap on this special earnings session. But up next is the F&O show with me and Navneet. So stay tuned in and we'll be back in just a bit.